The stock market is rigged, and in this video, I'm going to teach you something so powerful, it's going to completely revolutionize, industrialize, materialize your options trading. Your zero-day trading will never be the same. And what's the secret? It's called the ping pong bing bong, or just ping pong for short. And all this means is, at some point during the session, Wall Street is just going to have us sit at a strike. We're looking at April 9th, 2024 on SPY. We move down, we come back up, and then what happens? 517, we don't touch 518, and we don't touch 516 until down here. Why does Wall Street do this? Well, the entire market is a zero-day options casino practically. Millions, billions, trillions, lots of money being traded in these contracts. Something like 80% of all SPX contracts are zero-day. The notional value, can't even calculate it on my T89. It's big. And when they do this, right, who wins? Wall Street. Ping pong is where puts and calls go to die because of theta. Because if you buy a call right here, what time is this thing? 12:10, and you don't make any money from 12:10 until when? Until the end of the session, all this time, that thing is just bleeding out like a stuck pig. And Wall Street knows. Wall Street knows, like, what happened in this session. I mean, let's just look. We go down, we move back up. Oh my gosh, everyone's feeling it. We're gonna rip back on up higher. And they just tempt people, right? And all the retail traders are in here. Oh, this is it. You see one candle. It looks like it's going. Oh, this time it's definitely going. Oh, AMD and NVIDIA are green. No, not happening. So what's the strategy? Well, first, it's recognizing that it happens in almost every session, unless it's a trend day, full send mode, volume's insane. But what we want to do is wait for this thing to break, okay? You want to go in whatever direction it goes. And let's just talk about it. How do we know when it breaks? This is a good setup, right? And we can trade this every single time. Because we went up, oh, we came down, maybe this is the time we bounce. You buy this right here and you're hoping we go rocket straight up, right? But it doesn't happen. So what we need to do, if we're taking this trade, is when we come back down to here, just get out. Just get out. You're not missing anything. Because if this thing goes, when it breaks out of ping pong, especially towards the end of the session, it's like 2 strikes plus. It's crazy. Absolutely manic. And the worst thing is, let's say you're holding this thing. You're bleeding out, you're bleeding out, you're bleeding out. We get to right here. That's like 15:10. 2 hours, you're probably down 40% on the position. You're going to sell it. You're going to think, oh, shoot, I should have sold it right here when it was down 20%. Oh, God, I better get out right here before it goes to zero. And you are going to miss the winner, right? And this goes for something like 500%, like absolutely just crazy. Because why? You get 2 immediately, and then you even get higher than that, above 519. That's what this is about. Recognizing, 1, it's ping pong, and 2, knowing, hey, whatever way this thing goes, I'm going to chase it. And the reason why we don't chase this down move, I'm like, oh, Furu, why don't we chase this? It's not supported by any bears, right? You see a bear alert there, and we're going lower, what does that tell you? Wall Street's actively participating in the down move. But we move down after absolutely just annihilating every single person in the entire marketplace, market space, whatever you want to call it, who bought calls. They all get destroyed, and then we can have the move. And that's crazy. And that's what Wall Street does almost every single session. Ping pong depends on volume. Volume drives everything. You can see it down here. It's kind of hidden. 97%. We're telling you, this is hard mode. Don't even trade it until after 1300. So we're just going to look at that. By the time we log in, 1300's here. We already got mean reversion. And that just means when we go down, we come up. We go up, we come down. So we went down and we came right back up to the blue line, the 440 strike. We're seeing this and we're thinking, hey, I'm going to catch this whatever way it breaks. And what happens? Well, you get two bulls, one bear, and then we get this first move right here. This is a tricky part about the end of the day. The Robinhood close is right at this time, 15:30. That's when every 0-day contract is crushed. And Wall Street loves to kill Robinhood. They love robbing from Robinhood users. So what happened here? You go back up, you ping pong it right at the strike. There's not a lot of active Wall Street participation here, right? We're not seeing a bunch of florbs, the little green and red balls. We're not seeing a ton of alerts. So what does this mean? That means Wall Street is just about to kill all of the retail traders. Because if you're in this, you're likely buying calls, because who isn't, right? It's a bull market, or it was a bull market. You get this one spike, you get this one nuke, and where's the nuke happen? Right before the close, 15:30, right here. And then they rip it up, right? And you get more than a strike, and they close it right at 441.01. Nice example of, well, if you held it the whole time, you made money. But if you were patient, waited for the Robinhood close, kept bull bias, right? Because look at all of them. 1, 2, 3. As soon as Robinhood got out, it went up. Nice example of being patient, waiting for it, watching, and going. It would be nice if every time we had ping pong, there was a big break. Not the case. April 1st, I think this was the solar eclipse, something like that. Everyone was out staring at the sun. This is from 11 until the close, right? We don't even touch 521. We never touch 523. But we're telling you right here, nightmare mode, do not trade before 1300, bulls below, bears above, the blue line, a little bit cut off. And, you could have taken this thing at the end, I guess, with like 2 minutes left to go in the session, if you're feeling dangerous. But at that point, as long as it's a YOLO, probably not going to work. But if it does, be rich. Hey, free country. You do you. Just wanted to show this as an example of, hey, Wall Street is going to do whatever they want to the market, whenever they want. And sometimes they ping pong it the entire day. We're showing you that. Wish it was amazing every time. Not the case. But next we're going to look at high volume, full send, or easy mode, because it's completely different on our expectation, what to look for, and how to trade it. So let's do that now. April 15th, one of the craziest days we've seen in some time, showing only the bear alerts because otherwise the chart is a little bit too crazy. But because volume's high and tradability, I think it was on easy, and then we shifted to full send about out here, the strategy's different because we have bias, right? And it says it, you can kind of see it, follow the price action, right? We want to go wherever this thing goes. And at some point, it is going to ping pong, and that's what happens, right? So the initial move from the open down to right here, 512 strike. And you'll notice we don't really, I mean, maybe you go below it for a second right here, but basically we're just ping-ponging right at 512, okay? So this time, instead of end of the day, chase it whatever direction it goes in, we have bias, right? Because the first move is down, it swings back up a little bit. We want to chase and take whatever bear alerts, in this case, come up. And this is a beautiful trade because you're getting, 3 strikes immediately, and then you're getting, I don't even know how many that is, 6, 7, 8, 9, whatever. It's a lot, right? It's a lot. So we're locked in, we're paying attention because volume's high, you're seeing tons of alerts, hit 100% in the events channel, like boom, it is just firing off, like it's Vietnam in that thing, going crazy. We want to chase it in the direction of the initial move, which is down, and you get that right absolutely here. Awesome, right? The last piece here, losing some of my things, is that once we get 6, 7, 8 strikes, it is very rare to see more. I mean, this chart already on SPY, very unusual. So once we get to 504, your initial instinct is going to be, hey, I want to catch the rip back up. I'm going to get this thing to go higher, right? We're going to bounce and we're going to come back up a little bit. Don't really recommend doing it or trying it. Once we get this low or we get, this high, we'll find an example there. Typically just stay there because at some point in the session, right, Wall Street has to kill people. That's just what they do. And this time, the difference is with all these moves, I mean, this is the only time, 10:30 to a little bit, what is that, 12:15, 12:20? That's the only time they really bled anyone out. Not long enough. They didn't make enough money off of all the retail traders out there. So they're going to do it again. And it's like emotionally, people are excited, like, oh my gosh, we're going to break 500 today. This thing's going down, it's going down, it's going down. And then who wins at the end? Bulls don't win, bears don't win, no one wins. If you see major moves like this happening, like 200, 300, 400, 500% returns, at some point that is going to stop. And it does right here. So it's like, if you're late to all of this, not really sure you can catch any more downside, and you definitely don't want to try to catch a swing when you're down this low. Next, let's find a day where we rip, show you the same thing, and then we'll wrap this thing up. Video's already getting a little bit too long. All right, we're looking at January 8th, 2024 on SPY. You'll notice volume very average. We didn't have tradability back then, so we don't have a strategy here for you. But you'll notice we hit 471, and then we never break out, right? Higher. This kind of slow grinds, and it looks like it's going to come back down. And remember, this chart's not a candlestick. This is per minute data, so you don't exactly know how close we got to 471. But look, as soon as we break out, boom, boom, right? Because you're breaking out of the ping pong, and this is going higher. You see volume explode, and off to the races. These alerts right here actually return 500% plus, because you get 1, 2, almost 3 strikes, 2.5 strikes in the last 2 hours. So yeah, you would have made a lot more money if you bought and held these the entire time. But that's hard. Let's not pretend anyone here is a god trader. But what we can do is when we see the ping pong where it's just sitting at the strike, it's not going above, it's not going below, as soon as it breaks out, and you look, it breaks out to 472, it's never lower, volume's going up as well, and you make a bunch of money. And nothing is better than that. All right, wrapping it all up. High volume, full send, easy mode. We want to chase the ping pong breakout in our direction, right? And you get that there. Once you get super low, 6, 7, 8 strikes down, or 6, 7, 8 strikes up, wouldn't really try for any more. Wouldn't try for a reversal. Just enjoy that money. Most sessions are terrible. They look something like this. I mean, there's nothing. You're ping-ponging from 11:30 until the close. This one and only that comes out looks like a breakout. I mean, there's like 5 minutes left in the session. You want to gamble on it, fine. But as long as you recognize it's gambling, have at it. We still want to look, though. We do want to pay attention, because sometimes you will get this. April 9th, one of the best examples. Ping pong. It looks like it's breaking lower, but as soon as that thing touches 516, you get a bull and it rips. Always lose small. Sometimes, like this one, win big, win massively. That is trading ping pong. Look for it. Wall Street loves to do it every single session. And sometimes the breakout is insane. Have a good day. Keep it frosty. It's rigged.